All right, let's move on to the Fed now. In terms of what we saw today, and if you can wrap in the GDP report we saw earlier in the week, it seems like the Fed's course is steady as she goes, isn't it? Nothing here that would really disrupt the course the Fed is currently on in terms of timing on tapering or beginning to increase rates.
No, that's right. I mean, the Fed has told us that they're going to be done tapering, done quantitative easing in October. Then the considerable period starts, and is that 6 months? Is it a year? Is it somewhere in between? That's the key. And I think the key to that considerable period is how quickly the economy takes up the slack, and that's going to be, I think, most closely judged by wages. The Fed went out of its way in the statement that they released on Wednesday to tell us that, yes, the labor market's getting better, but there's still plenty of slack in the labor market, and you know, those indicators were part of this report. Some of them improved, some of them got worse. But in general, of the dozen or so indicators that Fed Chair Yellen looks at, only maybe a half of them at most are back to where they were before the downturn. So I still think there's a long way to go for the job market to recover, to get back to normal, and so that gives the Fed, I think, a pretty long runway before it has to think about taking up the slack in monetary policy.
And John, quickly on the markets, which of course we saw stocks have a very steep sell-off yesterday, not too much movement yet today. There's nothing in this report really that should rattle the markets, correct?
No, I hate to use this term, but it almost seems like a Goldilocks report. It's not too hot, not too cold. I think whatever you thought about the job market before the report, you still think about it now. I think a lot of the concern yesterday in markets was really around Europe. If you look at the European situation, their CPI inflation, their consumer price inflation year over year in the month of July was up just 0.4 or 0.5. That's pretty close to deflation. The ECB meets next week. I think the ECB can help to give the market a big boost if it hints more strongly that they're going to take some more action to help to combat the deflation in the Eurozone. So I think that's the key. Not a lot of U.S. economic data out next week. A couple big central banks are meeting next week. The ECB, I think, is the key meeting next week.